You are listening to ChartingWealth.com for Thursday, the 3rd of November, 2016. The market continues to move down steeply. Now, I've seen in the news lately people talking about how maybe this has to do with the elections and possibly this is a down move based on Trump. Well, those of you who've been with us for the last many weeks, months, well over a year, you know that as we look at the market, we always first check out the weekly chart. We've been forecasting this down move since it started occurring back on the 9th of September. Nothing new for us. The market has been steadily moving down. We've actually seen huge down movements back on the 7th of October. So again, saying this is somehow surprising, this has been happening. So let's talk about what's going on right now. And this is the reason you need to read these charts so you don't get fooled by the news thinking that new things are happening when they're actually old. That's why we say pay attention to the charts, not the news. What do we see going on in the charts? Well, the most recent 2-day chart that is just now drawing, we see on it a huge down spike in the market. We have a red down candle, and then we have another candle that's even further down as far as the wick goes on the candle. And it's actually well below the Bollinger Band. We have a kink in the MACD, or what we now call the PPO, the price percentage oscillator, and we see the derivative oscillator heating up significantly in continued down movement. We're below the 2-day trend line. We're significantly below the weekly line. And of course, if you had been following us, not simply listening to the talking heads, you would have gotten in on this down move back on the afternoon of the 27th of October. And it has plummeted since then. If you would have gotten in, even in the worst spot, that would have been the low of 106.60, let's see, 106.43. You were down almost $2 today. That is just a few days, less than a week later. That's how you read the charts, particularly when we go into the fall-winter trading zone. We talked about how bad the summertime trading zone is. Well, we've transitioned out of that into the fall-winter trading zone, and we are seeing significant movements. Now, they may be in one direction or another, but they tend to be cleaner and better because there's more volume back in the market than unlike the summer months. So let's keep moving through. I know we only have 10 minutes, but I'd just like to clear up these things you hear in the news. For the record, IYY was down 0.37 for the day on Wednesday the 2nd. We see the SPY, that's a Standard & Poor 500, also huge down wick on the big down candle, and another kink in the PPO, means kicking down along with a big drop in the momentum, well, a big increase in the downward momentum in the derivative oscillator. Now, if we look again, confirmed down moves below the 2-day and the weekly chart, we see again that crossover occurring on the afternoon of the 27th. That was your time to actually jump into something like SH. What is that? Well, that's an inverse fund that actually moves in the opposite direction. It's the ProShares short of the S&P 500. What did it do starting back on the 27th? Just like our chart showed, it started moving up. You could have bought in at the high. The worst spot to buy in would have been $38.64. The best, $38.47. And what did it end up over the course of the day? Where was the high? On Wednesday the 2nd, it was as high as $39.34. Not a bad return in just a few short days. Why? Because you can read a stock chart and not simply wait for some news source to give you information that may be outdated or not even accurate. The charts, people, pay attention to the charts, not the media noise. Now, lastly, in our indexes, before we get to gold, let's go to the Qs. The Qs, that's the NASDAQ 100, down 0.82% for the day. Big down candle on our 2-day chart. Also, all of the movements below the 2-day trend line and the weekly trend line. And I would point out to you, we had the weekly trend line in the NASDAQ 100 rotate over, going down back on the 21st of October. Again, nothing to do with the elections per se, rotated over, and we've seen that weekly chart continue to prove its worth in the long term. Once it paralleled the movements down in the 2-day chart, we then saw the backup occur on the 4-hour chart, and once that backup ended around the 27th, the afternoon of the 27th of October, we have had a nice clean down movement on the Qs. And again, what do you get in when there's down movement on the Qs? QID is the ProShares Ultra Short. I believe that's a double short. So for every dollar the Qs goes down, it's 2 to 1 basically. And what do we see going on? Of course, you saw the high 2462. It hit as high on the day on Wednesday as 2582. Not a bad return on such an inexpensive ETF in just a few short days. That's the value of being able to read charts and not being a victim of simply what you read. Can it help? Sure. But again, it's the charts that tell you what's actually going on. What's gold up to? Well, on the 2-day chart on gold, we can see that gold has continued to move up. It crossed over actually over the last 2-day candle as far as the PPO, the old MACD, and the signal line going up. At the same time, we always love to see it occur where the derivative oscillator flips. Also, lots of big up movement. Gold up 0.74%, so 0.75% gold was up over the course of the day on Wednesday. And we also want to take a look at the 4-hour chart, which is our real trading chart in gold. For those of you who've been playing around, again, doing your trading with your fake money, again, we always talk about how important it is for you to train. We're not a stock calling service. We want you to set up a virtual account at any of the online brokers and practice with us. When you get good, you can make up your own mind, use your own techniques, and your own money. We're not a stock calling service. Nobody pays us for that. We don't hold ourselves out as that. What do we see going on 10/13/2016? That was the 13th of October, Thursday. We saw gold rotate over on that 4-hour chart, which has been prescient. Gold has gone from the high that day of 120.42 all the way up to a high over the course of the day on Wednesday, the 2nd of November, all the way up to 124.76. Amazing, is it not, my friends? That's the power of a good chart and being able to read it. So please continue to follow along with us every day. If you want to know more information about what we do, go to our website, chartingwealth.com. We appreciate all of you being with us today, as you are hopefully every day. If you don't have your daily market worksheet, you don't have our 15-minute how to read a stock chart video, and you don't have the charting layout that we use at freestockcharts.com, you need to get it. And you know how you do that? You simply go to Charting Wealth and you sign up for our newsletter. You'll get our video for the training that we produce every single day where we review the markets for you. Plus, you'll get those 3 valuable additions that'll help you get on your way to figuring out what's going on. Because, folks, when the economic situation gets dire, and that is coming down the road, I believe it, so many economists agree with me, I agree with them, and we need to be prepared. You need to learn to read these charts so you can forecast accurately what's going on to protect yourself and your family. Thank you so much for being with us. We love to hear from you. All the best from chartingwealth.com.